Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about 3M India, one of the marquee stocks of the market and has been trading very well over the last 2 3 years. Let's understand what is the business like and whether you should invest in this high price stock or not. So, let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now, about 3M India, it was established in 1987 and they provide diversified products to a number of industries. So, their products range from screen protectors for laptops and phones to packaging sheets, packaging materials, more or less different types of sheets in different domains are provided, which are used in a number of sectors. So, different home improvement products to office products like boards and clips, etc., which are of the highest quality. Scotch Brite is one of its major brand, and you can understand that Scotch Brite is used throughout India in dishwashing and other kitchen uses. Has been a marquee brand for the last couple of decades, and everybody knew about 3M India, but what exactly the business is, I'm going to discuss that. A very good management, a very transparent management with a very good pedigree, and have strong market share in its domain. So they are probably one of only two or three companies that provide these kind of products, and they have it is more or less a subsidiary of the US firm 3M USA, which is working here and which is extremely profitable in US. And that's why the numbers are very robust, and that's why people who have bought into the stock don't sell. People who have not bought eventually buy it even at the highs. It keeps making new highs. A market cap of 27,000 crore had a market cap of around 3,000, 3,500 crore 5 7 years back. If you look at the financials of the company, then the sales have only improved by 3.5%. But if you look at the profit growth or the PAT growth, it has been absolutely tremendous from 70 crore to 100 crore in the last 1 year. The profit has grown by around 43%. Lower taxes, the corporate tax cut has really helped 3M India. Apart from that, high operational efficiency of making these sheets has also helped in gaining more profitability because the expenses for the operations have come down. So the expenses have come down, and the tax rate has come down, and which has led to the higher PAT levels. So lower taxes and a better operational efficiency. Return on equity close to 19-20%, whereas the operating profit margin has remained at around 16-17% for years. So somebody with some a company that is working with an OPM or operating profit margin as close to around 17% is absolutely magnificent. It is totally debt free, not even a single rupee of debt is with the company. Whatever little debt of few crores here and there would be a working capital debt, that's all, but no major debt with the company as yet. About the performance of the stock and the company, the stock has been range bound for the last 2 years. So I cannot say that the stock has really run up in the last 2 years and gone up 50-70%. It has gone up by around 10% or so, 19,000, 19,500 to 22,000. So around 10 to 12, 13%. The numbers have been strong, although the stock has not broken out in the same manner, and the return ratios, as I explained, around 20% has remained robust. I believe that it is trying to break out, and I'll discuss that during the technical when I discuss the technicals of the company. But for the moment, I can say that it is not very expensive. It has not run up like anything, and it has been range bound for the last couple of years. Yes, it is not being paying dividend, but they are investing their profits into expansion and into gaining more clients for different kind of products that they are producing. So not paying dividend is a cause for concern for such a company making such high profits of 30-40% yearly, year on year. But they are investing into the business, and making more profits, so that can be compensated like that. High promoter and institutional holding, only about 8 to 9% of free floats, around 90 to 91% promoter institutional holding is with 3M India. Why I believe it is a buy on decline, it is still a market leader in its space. So you have to understand that in terms of packaging materials, screen protectors, etc., or any kind of polythene or plastic sheets, or you can say protective sheets that is being used across the board in all industries, more or less it is from 3M India. It's a big consumption play for the higher middle income group for sure. That when they'll buy more phones, more laptops, or other products which require protection, then skin protectors will be used, or sheets, protecting sheets would be used in all industries. And not only that, they serve the middle income group or the retail players. They do serve high industry, or you can say the heavy industry department, in which they provide protecting sheets and other materials to heavy industries as well. It is a leader in the diversified segment, and with no debt on books for a company which has around 25 to 30,000 crore, then any profitability would go into the P&L account, and you'll see the profit grow substantially over the next 4 to 5 years. And remember, in the conditions that India is going through, with the kind of recession and with the growth at around 4.5%, 4 to 4.5%, it is better to stick with companies which are of less or no debt, rather than with companies who have leverage. Remember that it is a buy on decline also because HNI, or high net worth individuals, are having great stake in the stocks, and only a few percentage points stocks are with the retail players, others are with the big wigs, the large investors, or the promoters. If you look at the technicals of the company, then there's strong support around the 22,000 level. So any dip of 5-7% would be a very good buying opportunity. The short term support is around 23,000. So any 8 to 10% dip, you go ahead and accumulate this stock. Stock is currently breaking out when it's gone past 24,000, 24,500. You could see 27, 28,000 levels in the coming months, but any 10 to 12% decline, go ahead and accumulate. Don't look at the stock price per se, which is over 20,000. If you want to invest say a lakh 10,000, you can easily buy 5 shares, so buy one share every month, or do it like that. The 200 DMA lies at 21,800, which is not far off. So a long term stop loss could be close to 22,000, and keeps making higher highs. So it is not that you'll get major declines. It is one of the companies that is simply like Page Industries, Eicher Motors. So 3M India is in that bracket. So one has to be very vigilant while they buy. Look at the results and keep on adding such share. So buy on major declines and keep track of numbers. Have a good 7 to 10 year time frame. These stocks will make you very rich over a longer period of time, rather than holding it for trading. So it is like a cash cow, and not something which could become 5 7x in very quick duration. And always have less than 5% of exposure in any stock that you buy. So this was my video on 3M India. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. And please support me on Patreon. Thanks a lot for watching.